Okay, today is Wednesday, June 18. Welcome back to the Ticks and Trades channel. Yes, it has been 1 week since the last market recap video that I made. Tried a couple times to get one put together to wrap up the last several days, but life got in the way. The last video posted was Tuesday, June 10, so we're going to catch up right now. Everything in this box is what we're going to cover the last 6 days. Today is June 18. I realize that showing all the levels on the 1-minute chart of the SPY like I usually do, where I dissect each trade, that's probably helpful. But for this recap, I'm going to do it a little differently just to save some time. We'll look at each of the game plans for each day, starting last Wednesday, the 11th. So you will see the levels that were identified for the day, along with the market information that we were working with going into each trading session. But instead of dissecting each trade where the SPY hits a level and you trade in the futures based on that behavior, I'll let you plot the levels on your own, and you can double check the work if you're interested. You'll have all the data for each day, the way it was presented in real time, and you can go back to see for yourself how the levels worked. All the trades, whether they are good or bad, are tracked in the logs anyway, and we'll cover those toward the end of this video. And as you know, there are notes for each trade recorded in the log, so that should help you with that type of information if you are interested in following along. So the way I see it, there are over 400 recap videos that I've made where I've shown you how the trades would have worked out at the levels based on the rules of my trading strategy. So you are welcome to go back and look at any of the older recap videos to get an idea of how the trades are managed, at and around the levels as price comes into them, at least toward the beginning of 2024, when the format of these videos kind of started to become more standardized. The main thing I want to be sure is that everyone sees that the levels are calculated and put on the chart before the opening bell, and then you can see how price reacted at the levels during the trading session after the fact. So feel free to do your own work if you want to verify this last week's worth of playing by the rules trades. I do have footage of all the trades that I took over the last 6 days, so we'll look at those. In the interest of time, I probably won't narrate those recordings of the live trades unless there's something out of the ordinary that I want to point out. I believe you're aware enough of how trading the futures works to make sense of my trades. I'm buying contracts when I believe price will go up, and I'm selling contracts when I believe price will go down. Most of the time, those trade entries happen around my daily levels that I have calculated before the market opened. But as you know, I also advocate paying attention to the bigger picture and looking for opportunities in real time as the market gets underway. You'll probably see me take some creative liberties in some of the trades that I took over the past 6 days. So let's get into it. Here were the levels for June 11, and that was last Wednesday. And the game plan put out at 8:45 a.m. Market opens at 9:30 a.m. Eastern. You can read through this. There was a focus on the timing component. So where price and time converged on this day, there was a good chance that price could pull back. We talked about that. And of course, different possible levels of support and resistance. This is what the market looked like, or at least this is what the levels look like before the market opened on Wednesday. Here we have the trades that I took on Wednesday, June 11. Just let this thing run and you can sit back and enjoy. Ended up changing my mind and went ahead and went short there. You saw me take that limit order off, but I went ahead and took a chance and went there and went short there anyway, and it ended up adding 2 more contracts to that position, so a short 4, and you'll see a profit get pulled on that 4 contracts, on those 4 contracts shortly. $604.80 ended up being the high of the day. It went down from there. I was thinking going into the day that there was going to be a pullback. It just happened a little later than I anticipated, so that's why I wanted to be on the short side. So it took a while for this to develop, but $604.80, while it was not on the board in the morning, proved to be the high of the day. And I think I'll let this run for the rest of the day. I'll scrub ahead to the end of the day so you can see. That was the trade I took, 4 contracts, and they got back down and messed around with 600, which has been a pivotal price for the last week anyway. Here's June 11. That's last Thursday. You can see the levels and the game plan, read through it. So there's a trend line, different trend line today than the main one that was higher up. Really, it's not even on the board for this one, but 600 really is the main level that the bulls need to reclaim or stay above at least, and then fight the upper trend line. But there was one in the middle that I believe came into play today. We'll look at my trade next, but this is the way the market looked with the levels on the chart before the market opened on Thursday. Here is footage of the trade that I took. Actually, there was no trade, but I'll show you what I did because 601.38 was a near miss, played by the rules. They came up close, they pulled away, kind of gave the trade without giving the trade, and I pretty much played by the rules and just decided not to take the trade. Had to kind of close up shop early anyway. I think it was around 10:30, maybe 10:45 or so. So I stopped this recording about that point after not getting 601.38. And as it turned out, no other levels were hit. So it was really a non-factor since I wouldn't have had any other trades anyway if I wanted to stick to the rules. So there's me saying, okay, this level's probably done with that pullback. I'm not going to trust it again just in case they blast through it. So I'll let this thing run to show you. And then I think it was around 10:30. I'll scrub ahead here a little bit. Yeah, about 10:30 that this recording stops. And as you know, there were no other levels hit anyway on Thursday, so no trades in either case. Here are the levels for Friday, June 13, 8:05 a.m. It was sent out or available for subscribers to access, and the game plan. Once again, 600 is important. The same trend line that we had for the day before, the day prior, was on this chart as well, and you'll see it in the screenshot below. But the main trend line was higher up, probably around 6:05 or so. Did not come into play at all in the past 6 days, but this is what the market looked like before the market opened on Friday. This is Monday, June 16. Once again, we have the levels. You can read through that, read through the game plan. Sent out at 8:35 a.m. Still talking about 600 and the trend line. At this point, at least on Monday, it was kind of converging with 603.38. So make a note of the game plan, read through that, and here is a screenshot of the 1-minute chart with the levels on it before the market opened. Here's my trades. They gapped up on Monday, still fighting 600, or trying to stay above it at least. And not looking at my logs, so I can't remember exactly the trade. So we'll scrub ahead and find it. Yeah, I remember this. So let me just back up. So when they didn't come down here, I was going to scale in, expected it to bounce off this level. I went short, ended up loading up on some contracts around that 603.38 level. Ended up being short. I think it was 6 contracts short. I gave a couple points or a couple contracts away, several points on a stop limit I had up there. And I ended up adding to the position later. So I'm going to scrub ahead so you can see. There we go. Started out the day by losing a few dollars and then added the position. It looked like they were coming back below the convergence of this trend line and 603.38. So I went short 4 in addition to the 4 I had. So I'm short 8 right there. And there we go. 1837.50. I just pulled up my profit target to meet that price with 7 contracts. Took that off. Maybe I pulled up a little more. I can't remember. Let's let this play so you can watch it. No, I held tight. So I got the 7 contracts off, trailed 1 contract down, a little more, never got down to that other profit target. So I think it was $100 and something, 160. Got several points on the remaining contract with that trailer. Let's just move ahead here. Once that closed out, that was the last trade, and I just closed up shop around 1:30 that day. On Tuesday, June 17, I accidentally overwrote the game plan. I had a recording of the daily levels in the game plan from the back end of the website, so I just recreated it here, and you can read through it. So here's, once again, 600 is still the level that the bulls needed to stay above. You can read through this, make your assessment from it. Here is what the market looked like before the market opened on Tuesday. All right, here is my trade for June 17. So this was a little unusual in the sense that I didn't trade at the level per the rules. I just waited until they got on top of 642, this level here, and went long with 6 contracts. Scrub ahead here after 9:45. Saw some clues on another chart or two. Thought, well, they're going to have a little jolt here. I'll take advantage of it. So I went long, pulled 5 contracts off, if I recall correctly, and trailed the remaining contract for a little while longer. So I got a handful of points on the 5 right there, and had a remaining contract which I trailed, ended up getting stopped out. So net however many points that was on 6 contracts. Not too bad for my trade on yesterday. That was Tuesday. Might as well move ahead here. I think they come down for too long. There we go. And I had no reason not to let this run all day, but no more trades. But I did let the recording go until 4. There you go. Now we're up to today, Wednesday the 18th, and here are all the levels. Got some explanation for the ones in lighter blue color. So read through the notes and see what you make of that. This is 9:08 a.m. and talking about the bears were doing a pretty good job keeping price down. And we had the FOMC announcement at 2 p.m. So typically after 1 p.m., I don't advocate getting involved in the market. So that's the rule. So we're going to look at trades that happen before 1 by the rules, and then I'll show you my trade. Well, I guess we could go ahead and look at the chart because I still have the levels plotted for today, so it shouldn't take too long. But anyway, this is the game plan. Here's the chart before the market opened this morning. We can go ahead and look at the 1-minute chart. Here's the levels from the morning, at least the ones that came into play. Well, they didn't hit 601.37, but so they launched off of 597.53. They came down in the morning, bounced here. So typically don't take a trade before the 15-minute window is open. So 9:45, they were up here and going higher. But this was a no trade. I'm talking about 599.70 because a near miss. 599.65 would have been your triggering or your operating level. They got to a high of 599.59 within 10 cents, pulled away. There's your base hit right there. You don't want to trust it anymore. And sure enough, when they did hit it the next time, they pulled back a little bit, slight reaction, but not enough to get a base hit there. So no trade there at the 599.70 level. And when they got up to 621, now there was not any level on the board this morning before 601.37. When you watch my trade, you'll see me go short again up here. I scaled in this area. But even per the rules, if you went short here and they got out of the money, you don't reverse this trade at this point when you're out of the money, when you see a signal, which is explained in the rules, because you have a level within a certain distance higher up. Because the assumption is there's going to be enough resistance up here where if you have the combined position, you can pull a base hit off of that combined position. Well, they never got up to 601.37, but even so, holding onto this trade gave you a base hit as they came down. So these two levels are satisfied. Now it's approaching 1 o'clock here. They messed around with these levels during the FOMC announcement. The afternoon kind of got volatile. They came down to 597.53. We're not going to trade this because it's after 1 p.m. on an FOMC day. As you can see, if you were willing to withstand this trade, assuming you took it, you would have got a base hit with this bounce. But it's too risky, in my opinion, to get involved in the market while the market's trying to settle in from those Fed announcements. But anyway, that's what you would have done playing by the rules today. Here is footage of the trades that I took. This is today, this morning. So I'll scrub ahead here. So what I end up doing is scaling in this area, and I end up tightening this up a little bit just to kind of get a better price as price continued to go higher. This was a near miss, which I kind of ignored and ended up selling higher up. So I'm short 6 contracts pretty soon. You'll see this happen. And then I identified the level higher up right here. 695 was not on the board in the morning. That was kind of my line in the sand here. I think, yep, I kind of stopped at 8 contracts there. This ended up being the high here, at least for a while. And this was worth waiting out. So it took some time. So I'm short 8 at this point, and this was basically my line in the sand here, willing to go ahead and go short 2 more. I didn't need to do that, but that's what that limit order was for. I waited it out after some time. Yeah, this is where I pulled up the profit objective just a little bit. So there's, okay, I know it happens fast. Let me back up and show you again. So it's 2025, and then I adjusted it to 1725 and got out. I suppose I could have waited a little longer because they did come down more, but that was it. You can tell the levels are dotted. That's my indication not to do anything. And then let this thing go because I wanted to see what the FOMC would do. So here's 2 o'clock. I'm not in the market, of course, but I'll just let this thing run. Came back and watched the recording, or had the recording available just to share with you. And that's the rest of the day until 4, and pretty good week for the last 6 days. So here are the logs. We start out with the playing by the rules log, June 11 through June 18. So 6 days, and one notable thing to point out is, in the meantime, during the last week, we have passed 100% rate of return since the beginning of 2025. I can filter out the rest of the years, but we've been tracking 25, obviously, since January, and this is where we're at. So all the metrics here, the win ratio, the daily average, everything else, total trade days, just represents the year 2025. So we're not quite halfway through the year. I guess July 1st, July 2nd would be the 6th month mark, and we've already doubled our money playing by the rules. And here's the Sam's trades, same period of time, different trades, and I've highlighted everything that I've made, and you've seen every single one of these recordings because I record all my trades. So if you want to go back, they're all there, and I'm just at 100%, just past it. That's on fewer trading days. Just want to point that out as well. 71 trading days this year compared to 104. That means I've only traded 71 of the days, and it kind of tends to make my win ratio a little better. But anyway, these are the logs. You've seen all the Sam's trades. Playing by the rules are the potential points every level throughout the entire day during our window of time. What do we have here? 108 points total so far this month. Not too bad. So back on the daily chart. So we have to keep 600 in our sights. So let's just go ahead and put a line there. The bulls just have to get on top of 600 before they can get up to the trend line. And where's the trend line? I'll just leave it right there. It's close enough. 601, 601 cent. So this trend line I've talked about a few times, I just noticed that this low of this May 23rd candle, kind of in this general area here, and you can kind of get this narrowed down, but just to give you an idea on the daily chart, this is going to be some resistance they've got to get above in the big picture. So they've got some fighting to do to get above, to go higher. And there's other levels up here, but the high of this breakdown candle way back on February of this year, February 21, is going to be should be some overhead resistance. Depends on what else is going on. But this is where they're at now. So they're below 600. Didn't think they were finished with it. Said that a few times. Said this several times in the different game plans that we just went over in the last week or so. So that's kind of the line of the sand. What about the flip side? So we go ahead and move this level down to this general area here. This is an area that will provide support until it doesn't. Meaning if they get below this, that's not too good for the bulls. Took them some time to get above this. Obviously a fail back on May 19. The next time they came up, they got above it. They come back down. They've been bouncing a little bit around here. If they start closing daily candles under this, what do we have? 595.10, close enough. Call it 595 even. If they close candles below 595 in that area, then, like I'm talking about daily candles, they close one or more daily candles under this level, we need to start looking for clues why the bears might have the upper hand. But until that happens, this is still an overall bullish market in the big picture. Look how far above the 50-period moving average are. We're above all the moving averages, the daily chart. So it just could be a little bit of a reset, a rest for them to come back before they push higher. It'd be really helpful if they get above that trend line, which I just removed from the market just to clean this thing back up. So that's all I have for, well, the last 6 days. Hopefully going forward, I'll just get them in 1 or 2 day increments. No, it's probably helpful to talk about the near term when it's not like in the past several days. Right here, we can look at the next few days, not tomorrow, but Friday, Monday, next week. We have something to work off of. So anyway, I hope that is helpful. Thanks for hanging in there. I appreciate you watching. If you found some value in this recap or the last several days worth of recaps, consider liking this video and subscribing to the channel. I would appreciate it. I will talk to you again soon. Have a great rest of your day.